What if I told you there's a way to grow wealth without picking stocks, chasing the market, or stressing over every financial headline? A way to quietly build riches in the background while you live your life. That's the power of index funds. In this video, I'll explain why index funds are the silent wealth builders and why so many millionaires credit them for their success. Most people stress over stock picking and market timing, but index funds quietly build wealth in the background. And the world's millionaires credit them as a key tool for building wealth. So what are they? Why do they work? And how can you use them to build wealth slowly but surely? First, we need to answer the question, what are index funds? Well, an index fund is an investment fund that tracks the performance of a market index. This is the S&P 500. This means that if the index goes up by 1%, the fund also goes up by 1%. It does this by holding hundreds of different companies within one fund. For example, the S&P 500 index fund holds around 500 of the largest publicly traded companies in America. By investing in an index fund, you are essentially investing in all of these companies at once. And because it holds so many different companies, you get what's called built-in diversification. Diversification is a fancy way of saying that your money is spread out among many different investments, which helps to reduce risk. You see, if you put all of your money into one company, then if that company does poorly, then you lose all of your money. But if you spread your money out among hundreds of different companies, then if one or two companies do poorly, it doesn't really matter because your other investments will hopefully be doing well. And this built-in diversification is one of the things that makes index funds so great. But there is more. Another thing that makes index funds so powerful is that they are very cheap. You see, when you invest in a managed fund where a professional is trying to pick stocks that will beat the market, those funds usually charge very high fees. These fees eat into your returns year after year. Because index funds simply track the market, they have very low fees, often as low as 0.04%. These low fees mean that more of your money goes towards your investments and less is eaten up by fees. So we know that index funds are diversified and cheap. But why else do millionaires love them so much? Well, no. 3 is because they are simple. Index funds allow you to invest in the entire market with just one investment. This means that you don't have to spend time trying to pick individual stocks or trying to time your investments. Instead, you can simply buy one index fund and let it do the work for you. And that leads us to our 4th point, which is that they are passive. You see, with index funds, you don't have to actively manage your investments. You simply buy the fund, and then you sit back and let it grow. This is unlike investing in individual stocks where you have to constantly monitor the stock price and make trades as needed. With index funds, you buy and you forget. You don't have to worry about whether you bought the stock at the right price or whether you should sell. This passive approach to investing can be very appealing. It allows you to invest without having to constantly monitor your investments or make trades. And this can be a huge benefit for people who are busy or who don't have the knowledge or experience to actively manage their investments. The 5th reason why index funds work so well is because of something called the long-term market growth trend. Simply put, over the long term, the stock market has a tendency to go up. Of course, in the short term, anything can happen. There can be crashes and corrections and times where it seems like the market is going down forever. But over the long term, the market has always recovered and gone up. Warren Buffett, the world's greatest investor, said it best. In the short term, the stock market is a voting machine. In the long term, though, the stock market is a weighing machine. This means that in the short term, the stock market is driven by people's emotions and opinions. But in the long run, the stock market is driven by the actual performance of companies and the overall economy. Since the economy tends to grow over time, the stock market tends to grow as well. This long-term growth trend is one of the reasons why index funds have done so well over time. By investing in an index fund, you are essentially investing in the entire market. So you are able to take advantage of this long-term growth trend. Now that we know what index funds are and why they work so well, let's talk about what makes them so powerful. One of the most powerful things about index funds is their ability to generate slow, steady growth. This is what we call the quiet growth effect. You see, when you invest in an index fund, your money is invested in a wide range of companies. This means that if one company does poorly, it doesn't matter, because your other investments will hopefully be doing well. Plus, Since you're investing in the entire market, you are able to take advantage of the long-term growth trend of the economy. All of this means that your investments will grow steadily over time, even if there are some bumps along the way. Let me illustrate this with an example. Let's say that you are young and you have a lot of time on your side. You decide to invest $500 per month into an S&P 500 index fund. You do this every month for 30 years. At the end of 30 years, assuming an average annual return of 8%, you would have around $600,000. If you keep investing $500 per month for another 10 years, you would have around $1 million. And if you keep investing for another 10 years after that, you would have a staggering $2.3 million. Now that is a lot of money. And it all came from slow, steady growth that happened in the background while you were sleeping. That is the power of compounding. Index funds make it easy to take advantage of this powerful force. By now, you probably understand why index funds are so popular. They are diversified, cheap, simple, and passive. And they also generate slow, steady growth. However, there are still some common myths about index funds that I need to address. One of the most common myths is that index funds are too boring. People think that investing in index funds is too boring and that they want to invest in something that is more exciting. But here's the thing. Boring is powerful in investing. Boring is good. You want to invest in things that are boring and predictable, not exciting and unpredictable. Index funds are boring, but that is what makes them so powerful. Another common myth is that index funds are only for the rich, but this is not true. You can start investing in index funds with as little as $50 or $100. Some brokerages even allow you to invest with just a few dollars. So don't think that you need to be rich to invest in index funds. And finally, the last common myth is that index funds don't make you rich fast. But this is not true either. Investing in index funds is not about getting rich quick. It's about investing consistently over time and letting compounding interest work its magic. If you do this, you will eventually become rich. If you've made it this far, I want to share with you how to actually get started with index funds. First, you need to open an account with a brokerage like Vanguard, Fidelity, Schwab, M1 Finance, Robinhood, Webull, Public, etc. Then choose a low-cost index fund. The most popular choice is the S&P 500 index fund because it tracks. It's the 500 largest publicly traded companies in America. But you could also choose a total market index fund that tracks all publicly traded companies in America. After that, automate your contributions by linking your checking accounts and setting up automatic transfers. This is important because it ensures that you are investing consistently every month without fail. Finally, be patient and let compounding work its magic. Don't try to time the market or pick individual stocks. Just buy and hold the index fund for the long term, and you will see your investments grow steadily over time. That was a lot of information, so feel free to rewind and replay any part of the video as needed. Now, before you go, I need to ask you, do you currently invest in index funds? Comment below and let me know. To stay updated on all things personal finance and investing, make sure to subscribe to The Wealthy Path and hit the notification bell. And if you want to learn more about how to invest in the stock market, check out my other videos. Thank you for watching, and until next time, I remind you to keep hustling.